This is the Empowering Healthy Business Podcast, and I'm your host, Cal Wilder. Each episode, we'll dive into topics important to folks who want to run businesses that are both nicely profitable, sustainable, and scalable, and who want to achieve balance in their lives and realize their potential inside and outside of work. This show is sponsored by Smartbooks, provider of bookkeeping and accounting for businesses. Let's get started. So today is our 50th episode at Empowering Healthy Business. And I didn't intend to necessarily have another episode on fraud since just a few episodes ago on number 47, we had Kurt Moore on to discuss real estate title fraud and squatter risk. But after I got introduced to today's guest and talked to him a little bit, I said, I got to have him on now. So when I first got connected to Jason, we started talking about bank fraud as he spent much of his career working in the banking industry, managing fraud risks. But then somehow crypto came up, and that became a very interesting conversation. And I definitely want to share that with you, right? Crypto is kind of all the rage these days. People claim to make a killing on their investments, but yet we've also had some major bankruptcies and people are losing their life savings at the same time. And it's just ravaged by fraud as well. So I want to welcome Jason. Thank you for joining us, Jason.
Hey, Cal, honored to be here, particularly on your 50th episode. So I'll do my best to live up to the hype. Thank you.
So it's Jason Costain joining us from England, right?
That's right, yeah. Although I do work internationally, so my banking career has been based in the UK, but a lot of things that's been happening in the UK for the past decade are now playing out across the world. So the UK has been quite a leading I guess regulatory regime for how banks are meant to deal with and protect scam victims. So that's something we'll cover later. But part of that challenge has been, as a bank, being responsible for protecting customers and potentially on the hook for refunding them in a lot of cases in the UK, unlike other regimes. That means banks have really invested in scam defense, and things like crypto investments and other types of scams have been front and center for 6, 7, 8 years. And as a result of that attention, the need to refund people, the financial incentives there for the British banking industry to actually do something about this. So as much as refunds have been criticised, why should we refund scam victims? They're all idiots, aren't they? Is often the refrain I hear, and they're not all idiots. When the banks are on the hook for doing something more, you start to see some serious investments and real brain power put against the problem. And that's what I'll talk through today in our conversation.
Great. And now in your career, you've worked with a number of banks, large financial institutions in different areas of fraud and risk management, right?
Yeah, that's right. I mean, 25 years, started off working on credit card fraud, and then application fraud, which is criminals applying for products and identity theft and stuff. Got involved in mortgage fraud prevention, payments fraud prevention, so all types of anything you do with a retail bank account, particularly all different types of fraud attack, I will have dealt with over the last 25 years or so.
So you've seen a lot with a front row seat to it. Let's start with crypto, though, like maybe crypto one-on-one, the basics for people, and then we'll get into like the scams and the risks involved. But maybe we'll start with like what is a cryptocurrency? Like, how is it supposed to work?
Well, I mean, so my disclaimer right from the start is I don't hold crypto, and I've got some quite clear opinions on what I think of cryptocurrency. So I'll tell you talk you through how I think it works, because obviously I've spent a bit of time looking at it. But in the words of the UK Financial Conduct Authority and many other regulators around the world, the advice to potential crypto investors is be prepared to lose all of your money. So regulators don't often talk in such stark tones, but you've got the Financial Conduct Authority of the UK, which is at the heart of the global banking industry. London is a significant player in global banking and commerce and trade. You've got the regulator saying, be prepared to lose all of your money. So, crypto for me is blighted with fraud and scams, and we'll talk about that in a second. But really, so cryptocurrency, I mean, even if you look at the background to it, so there's a mysterious figure called Satoshi who supposedly invented this kind of this digital currency, I don't know, 20 odd years ago. Nobody knows who he is. But this digital currency that
So
exists,
he's
it
like
has
he's the founder of Bitcoin, basically, right?
supposedly, if you want to read the history, supposedly this mysterious figure came up with this technically advanced way of creating a unique digital token and the blockchain. So this blockchain is, secure supposedly, and each token that gets minted in Bitcoin, which was one of the original sort of crypto token, um, there's only a finite number of crypto bitcoins that can be minted. So, that at that point will be reached at some point in the next decade. But basically, cryptocurrency tokens can be mined, but it's just a kind of mathematical process using computing power to create a token that's unique, and that token enters the blockchain and gets validated by other kind of trusted sort of mining kind of crypto sort of entities. And what you then have is a supply of tokens which has a finite number, so you can't just print and print forever. And then there's a kind of, once you've minted one, and if I own a Bitcoin, then it's a unique token that can be traded securely, and there's a public blockchain, so you can supposedly see where it went and who owns it once you've sold it. And you can't duplicate these things, and because of the finite supply, the idea is the more people want them, the more the value will go up. So what we're seeing from
So it's supposedly this transparent currency with a finite amount, so kind of like the gold standard in the old days. There's only so much gold in the world. You can keep looking for it and mining it, but at a certain point, you've already gotten most of the gold out of the ground, and at a certain point, you've already mined most of the Bitcoin. You can keep mining it, but the returns get pretty diminishing. So there's kind of a finite supply, and it's supposedly very transparent, right? Those are like the pros of it,
yeah,
right?
that's the pros, and I think the PR of the crypto industry, and unfortunately, it is really, there's a lot of hype behind it, and when you look at a lot of the sort of the fans of crypto, a lot of very similar languages being used and a lot of hype is being used, and you look at it and think how much of this is being produced by the same few parties who have a interest in pumping the price of a particular cryptocurrency. um, but yeah, the sort of the kind of crypto PR has been, this is a replacement for the banking industry. People can pay between each other. We don't need banks, and banks charge us a lot of money, and it takes ages to move a payment
And the
internationally.
libertarians among us like the idea of a currency that's independent of government control,
Yeah,
and the tendency governments have to inflate the currency to be able to support, budget deficits by just printing more money, to talk simplistically. So there's some people philosophically like the idea of crypto because it's independent of government control, and then governments don't like it so much in general because it is independent of government control.
mm-hmm. Yeah, and crypto thing first really came to the government's attention when I mean, this is UK example, but I spoke to one police officer who dealt with fraud and and criminality generally, and they said pretty much every criminal they arrest these days that's involved in has organised crime links, and this is going back 10 years. Pretty much every criminal they arrested had cryptocurrency wallets. So it's unfortunately gone hand in hand with organised crime, with laundering money, and the controls from the libertarians would be, well, I want to be able to buy and sell crypto. I don't want people to know who I am, and this is the perfect currency. But actually, unfortunately, it's the perfect currency if you're a money launderer or you're unorganized criminal. And it was the chosen currency of certain dark markets where you could buy guns and drugs and hire people for tasks like assassination. And it was the chosen payment method. So it unfortunately has come with a lot of tainted history. And the other main market was a Korean sort of supplier of video for child pornography. So when you bought child porn back in the very early days of cryptocurrency, you paid for it in crypto because it was supposedly anonymous. So early adopters of crypto, were people using it to buy things off the dark web, and it would be either illegal goods and it would be legal goods and services, possibly linked to extreme content. So it's not had a great history, but even the early law enforcement players who got involved, some of the FBI who investigators who were investigating the child pornography supply. Some of those investigators actually stole cryptocurrency themselves and sold it, and they thought it was not traceable. But a company called Genalysis created some software that could look at public blockchain and find out who owned the crypto, where it had gone to. So, that it's a fascinating book, written about the origins of chain analysis. I can't remember the name, but I'll send you after the call.
Okay.
That tells you the origin of crypto, the origin of law enforcement interest, the kind of dark arts involved, and it's a really good starting place for where all this came from.
Yeah, so like you, I've avoided personally investing in crypto because it just seemed like a black box with a lot of risks, and I didn't want to be the greatest fool and lose money because I didn't understand the market I was investing in.
Yeah.
But let's just talk about kind of the basics. So, say you have British pounds or US dollars, whatever, and you want to buy crypto. So you open up a wallet at some company that's kind of like a bank, but not regulated like a bank is. And you have a wallet and you trade US dollars or British pounds for Bitcoin or some other cryptocurrency,
Mm.
and then it's in your wallet. And then you're subject to the vagaries of the market, the value of the currency going up or down. And certain vendors will accept it as payment for goods and services. And I think that, the universe of people accepting crypto as payment keeps expanding over time. But really, you've got to be able to eventually trade your crypto for something of tangible value. And then if you want to get liquid and get back into British pounds or US dollars, you can then exchange your cryptocurrency for pounds or US dollars. And that all sounds well and good, right?
Mm.
And we can talk about all the problems and risks and scams that go on, but like in a nutshell, that's pretty much how it's supposed to work, right?
Yeah, supposedly, but I'm yet to find anywhere that I can buy anything useful with crypto. I'm sure people listen to this who have it might have a different answer, but Elon Musk once was saying you can buy a Tesla with crypto, but quickly found from a regulatory perspective, you can't prove where that money's coming from. You don't really want anonymous supplies of cash and being an off ramp for cryptocurrency, given where it might be from. So he quickly found out he couldn't actually do that. So, yeah, people say you can spend crypto, but you'll be hard pressed to find where that is. So yeah, in terms of how it works, so if you wanted, so the worst thing you can do if you're interested in cryptocurrency is to Google investment in crypto, because there's a high likelihood even now that one of the top search results on, say, Google might be a website that's offering you cryptocurrency investment advice, and that would be a fraudster's website. So I've seen countless victims, and you're talking hundreds of millions of pounds lost from who've gone online one day and thought, I want to invest in crypto. They find a website looks really appealing. They put the name and the phone number in, and within a day or two, they're getting a phone call from a cryptocurrency trader, as they're called. And these crypto traders will tell them that how to do it, how to open an account with a wallet provider, how to move money, and effectively the victim is duped into either investing in a cryptocurrency wallet that just doesn't exist, or investing in a cryptocurrency wallet that actually is under the control of the criminal, even though it might be in the victim's name. So the criminals are very good at getting the victims to download remote access software, very good at asking the victims to send passports and driver's licenses as ID methods. So it all sounds very official. You're opening an account with this cryptocurrency trader investing firm. But what they're doing is they're using your credentials to open an account with a cryptocurrency wallet. And ultimately, they have control of the wallet, not you. So when you send your fiat currency, as they call it, so, a sterling or a dollar payment, you get that into the wallet that is in your name even, because it's been opened with your ID documents, but you don't control it, and very quickly you see the money disappear. But also what the cryptocurrency traders are very good at is they've got software that mimics market movement. So they'll say, here's the value of your wallet today, and then next morning your wallet value's gone up. You've doubled your money. Do you want to invest more? So victims very quickly start to invest more and more money
So you're actually
in a
faking, stock charts, like
yeah,
cryptocurrency
that's
charts. Yeah, just completely
100%
faking charts. Huh.
completely faking stock charts. And you then it's the problems arise when you want to take some money out. And I've even seen it where the crypto firms will say, get a victim to introduce a few £100 as a start, and then it might be a few £1,000 after a few days. And then the victim will say, well, okay, I want some money back. So the criminals will send them maybe £100. They'll convince them to take some profit. And of course, the victim's just getting £100 back of the money they've sent. So the criminal's not giving them anything, but that's a bit of a trade by crypto scammers to almost prove to the victim that yes, you can get your money out. And then once people get that small payment back, they'll invest more and more money. But of course, down the line, it all vanishes. The trader disappears too, and you can't find your crypto, and you can't. Very difficult to trace it as well, because there's actually things called crypto tumblers, which are services you can find where you can put your crypto in, and you'll get the same or similar value back out, but it's been washed and laundered. So it's called a tumbler service on the sort of crypto web. So there's even services in the crypto universe which are designed for laundering payments, so you can make it very difficult to trace. And that's a seemingly legitimate activity in the cryptoverse, as I'd call it.
Hmm. Okay, so let's talk a little bit about the scams, then we'll talk about kind of the volatility risk. Even if it's not purely fraudulent, there's a lot of volatility risk as well to think about. But as far as the scams, you just described a situation where you're kind of duped into investing through this completely fake business that's effectively kind of a Ponzi scheme that eventually collapses. But then there are the pump and dump schemes, right? So
Mm.
how do those work?
Well, I mean, it's a brilliant. I mean, I'm sure a lot of your listeners will have seen The Wolf of Wall Street and the penny shares, and Leo DiCaprio phoning somebody up who might be interested in investing in stock, and he's pumping Aerodyne. I think Aerodyne Aeronautics it is some Midwest firm, and Scorsese's clip is Leo DiCaprio on the phone, and then it goes to a shed in the Midwest of the US that says Aerodyne Aeronautical on it, and you're thinking, yeah, this guy's only going to invest $5,000 in penny shares in a business that's basically worth very little, and they just then try and sell more and more investors shares in this scheme, but the people who are promoting that actually own some Aerodyne stock themselves, and it's a pump and dump scheme. So in driving up the price by getting more and more investors involved, the criminals sell their early investments, and then people are left with shares that are worthless because the demand collapses, and everybody realizes this company is worthless. So it can be pump and dump, and I think there will be future questions asked. To give you an example, a few days before I think Donald Trump was inaugurated, there was a cryptocurrency was created by Trump, and the value of that was phenomenal on the day it entered the market, but within a couple of days it crashed. So the early investors made a lot of money, potentially billions of dollars, and those who bought it at a peak probably lost pretty much all the money. So you've got right there, it plays out. Be prepared to lose all of your money, and that's a very high-profile example of a highly sought-after token that's intrinsically worth nothing, because cryptocurrency is intrinsically worth nothing unless people want to buy it from you. So it's unfortunately open to massive market manipulation, and that's where when I've looked at the kind of language being used about how the cryptocurrency market's going to move and what might affect the market, and now's a good time to buy, and here's why you should buy now. A lot of the language used is very similar. So I'm reading this stuff thinking, who's pumping all this stuff out? So unfortunately, it is open to massive market manipulation. So, you've got to look at all those risks and think, right, there's a risk of fraud, there's a risk of massive market manipulation. And that's before, if you have managed to get your money into a genuine cryptocurrency exchange, so you've sent $5,000 to a legitimate crypto firm, let's say Coinbase, for example, who are, I think, NASDAQ listed, and authorized by the US authorities to a degree, you might have $5,000 in your wallet. You might want to buy $5,000 worth of Bitcoin, but you've got to hope that Coinbase is still around tomorrow if you're holding your currency in what's called a hot wallet, so the wallet on the Coinbase server. So we've seen examples, and Sam Bankman-Fried was one where currency exchanges, crypto exchanges have been hacked and cryptocurrency stolen. You've seen cryptocurrency exchanges where the owners have stolen the money. So you've got the risks, the triple risk of pump and dump schemes, scams, and then a genuine crypto exchange actually collapsing for one reason or another.
Right,
So
because
if
you
you
have this
look at all
crypto.
of that,
You either have to stick it in a virtual exchange somewhere and take these risks, we're going to talk more about, or you can like get like a USB card or something physically and hold it or something. But what if you lose your USB card, then you've lost all your money, right? So,
oh yeah, that's it. So you've got like the hot wallet is held with the exchange, the cold
uh,
wallet is on your USB stick, but you better hope you don't lose that. There's a famous case in the UK in the last few years of a guy who's got a computer hard drive allegedly went to landfill with maybe, I don't know, it was several $100 million worth of crypto on it allegedly, and he's been trying to get this landfill site there's hundreds of thousands of tons of waste in it, dug up to find his hard drive, and I don't think he succeeded, but he nearly had investors at one point, and you just look at that and think, yeah, you definitely don't want to lose your wallet. But the cold wallet is something you've got, and it's probably, well, it's highly secure, as secure as you can be. And but then you've got to get that back into a crypto exchange to then trade it with other people to sell it. So actually, crypto right now is a means of moving money, and it's quite slow, it's quite risky, and it's quite expensive. So as yet, it hasn't sort of delivered on the early promise of this, kind of payment mechanism that's utilitarian and libertarianism and all those things. And you're seeing crypto firms now coming into alignment with regulatory authorities. So a lot of the crypto firms out there are now applying for registration with different regimes, whether it's the UK FCA or the US authorities. And when they do that, they have to subject themselves to money laundering regulations and ID people properly when they open accounts. And if you're going to stop crime and stop laundering and stop misuse by the Russian state and North Korea, these are things you have to do. So we either want a world where we proliferate, you know, nuclear weapons and child pornography, or we don't. And bringing the cryptocurrency exchanges under a bit more regulation is not a bad thing to stop crime, libertarianism or not.
and so we've all heard of Bitcoin, but there are like literally hundreds, if not thousands, of different currency out there, right? Right, and
Yeah.
so and they're incredibly volatile. Like we might look at the exchange rate between the U.S. dollar and the British pound or the euro or whatever, and it might move, a quarter of a percent in a day or something, and that's like a big move in established currency exchange rates. But give me a sense of the magnitude for how volatile these crypto instruments are.
Well, I mean, like I said, with the Trump currency, I mean, that literally, you want to look at, you can Google that and you can see, I think it went, I don't know, maybe double digit dollars, and then it went to cents. So you're talking about a huge loss over a
Well,
few
like
days.
double
Yeah,
digit percentage moves over the course of a few days, if not
it
sometimes one
utterly
day.
just
Yeah.
value pretty much destroyed. Yeah. So, and even Bitcoin, you used to be able to supposedly buy a pizza for a Bitcoin, so maybe worth a few cents or $12, and now you was trading at, I think, approaching $130,000 for a Bitcoin, maybe $90,000 now. But even those fluctuations are quite big. So I think, unfortunately, the appeal to the common man and woman is, I could make a lot of money from this, but then the downside is you could lose a lot of money. And in terms of a smart bet, who's really got the knowledge to know where it's going to go? And actually, when it's subject to significant market manipulation, which it appears it might be, or it definitely is with some of the smaller currencies, it could move 10-20% over a couple of days, and that's 10-20% of your life savings vanished, even more. So, and that's before you get into crypto derivatives and that kind of stuff. So it's highly fraught, and I do raise my eyebrows when people say they're a cryptocurrency investor, because I just think it sounds a little bit more like gambling to me. And people, I've got a couple of friends who are investors in crypto, and they kind of talk to me about stuff, and I've worked in financial services for 30 years, and within a matter of seconds I'm thinking, I don't quite understand what you're saying. And when I drill into their understanding of what they're saying, they talk in buzzwords, but they don't seem to really understand it either. So I just think you're just reading a lot of stuff online and piling your money in and hoping it goes up.
Yeah. So even if putting aside, straight fraud risk, this level of volatility introduces another kind of risk that's probably underappreciated, which is the the solvency and stability of the firm that offers the wallets. Like if we think in
Yeah.
terms of a traditional bank, you think of a bank as being relatively conservative. They take customer deposits, they lend it out in mortgages and other kinds of loans. Um, but they end up more heavily leveraged than people may appreciate. Like banks are routinely leveraged for every $1 of equity. They may have 15 or even $20 of assets. So they might be leveraged 15 or 20 to 1. But if they do a
Mm.
reasonable job of maxing the duration of their assets against their liabilities, if home interest rates change, the value of the mortgages they hold makes it go up or down, but at the same time, the value of the customer loans they made may go up or down, and
Mm.
banks do go under from time to time, or governments might issue a bailout if it's extreme enough, like we saw in 2008, 2009, and with some banks, but you know, even though they're so highly leveraged, the underlying volatility of their assets and liabilities is pretty low unless they're dealing with super risky assets or
Yeah.
they've mismatched the duration of their assets and liabilities. So banks generally don't go out of business, even though they're so highly leveraged. But with these crypto wallet providers, if they're not regulated to the same extent banks are, like you said. They're less transparent, but if they are leveraged 15 to 1, that means they only have, 7% of their assets are represented by equity. And if crypto goes up or down 10, 20, 30, 40% from week to week, they could very easily wipe out all of their equity. And now you've got a bankrupt company controlling your assets, right?
Yeah, and I don't know. I don't understand the kind of the liquidity rules for crypto firms, but when you in the UK, and I think it's the same in the US, the government has something called in the UK has something called the Financial Services Compensation Scheme. So I am, as a UK citizen, I'm guaranteed the government will cover my deposits with any bank in the UK up to the value of £90,000 if the bank goes under.
Yeah.
So if I've got £1 million, I could have accounts with 12 different banks and evenly split it across those
Yeah, we
banks.
have something similar in the
Yeah,
US. Yeah.
I don't think there's anything similar exists for crypto. They're meant to keep funds in escrow or have some kind of insurance to cover it, but ultimately the example of FTX is the one I was thinking about before with Sam Benjamin Fried, SBF as he was known. They was taking consumers crypto currency, their customers, and they were investing it in risky things. And when it came to it, there was then a big call on those funds. There was rumours about that kind of thing happening, and they had a liquidity crisis. And hey, this it's going to unwind, and there's talk of people might get some of the money back, but that's not. I don't know where that's happened yet. I don't know where that's up to, but this is several years later.
Yeah.
So yeah, this whether or not it's liquidity risk, you've got a host of cryptocurrency exchanges that are all in a fairly hostile global environment now, where you've got hacking and nation states sponsoring very talented groups in North Korea and Russia who would love to take value out of a US based cryptocurrency exchange. And those exchanges have got a hard job on their hands to defend against cyber attacks. So you better hope that the crypto exchange that you use has got good enough defenses to hold that kind of thing off. So it's fraught with risk, unfortunately.
And FTX was in the headlines, and there appears to have been some uh, charitably call it mismanagement, less charitably call it just fraud with
Yep.
FTX. But we also had, in the last few years, we had Celsius Network, Voyager Digital, BlockFi, and Mount Gox. Like, this is not an isolated situation with FTX. Like, these
Mm.
these wallet providers, like, some of them go out of business every year.
Yeah, that's it. So, I mean, you might look back in 20 years and say there's this infancy of the industry, it was growing pains, and look at it now, it's mature and all this stuff. But the more mature it gets now, the more it's maturing, the more it's coming into line with standard banking services. It's coming under regulation, and the owners are they want to take value out of their businesses they've invested in, so they want to list on the stock market. And if you do, then you're going to have to subject yourself to regulation, get approval. So perhaps do all the things that crypto wasn't meant to do in the very early days of that libertarianism stuff that you mentioned, Cal. So you're seeing a lot of crypto firms trying to legitimize, a lot of regulators trying to embrace it, and it's going to be several years before it matures. We might look back on the current day and previous years as the wild west of crypto, but look what emerged. So for me, I'm kind of going to wait and see. I'm not going to be investing anytime soon. And the final thing I'd say on it probably is, you know, non-fungible tokens, so NFTs. So there was a big bubble in NFTs a couple of years back, and you could have paid hundreds of thousands of dollars for a unique digital artwork, and it's just a digital artwork. It's a set of pixels that's unique, and it might have been produced by a renowned artist, but ultimately those are being traded. They can be produced for pennies, and they're being traded at thousands, if not hundreds of thousands of pounds worth of value. And there was a big surge in demand and prices for those things. And you look at it now, there's very little being traded. There's a lot of artworks that just aren't worth what they were. And you think, well, that was just a bubble, and intrinsically it's worth nothing. So if you step back a bit and say, okay, well, that was NFTs, that was artwork, but it's on the same technology as cryptocurrency tokens. What's the difference? It's just about whilst there's demand there and it's a store of value, then it's useful. But what if it all goes pop like NFTs appear to have? So for me, as long as people still want Bitcoin, that's great. But over time, let's see what emerges. So it'll be fascinating to see where it goes in the next decade.
Yeah, it seems to me like the keys are, figuring out a way to safely warehouse your Bitcoin. Like the hot wallets have all the risks associated with the wallet provider bank, and then the cold wallets have the risk of you just lose it or your house burns down or you lose your USB token and like you've lost all your money, right? So the
Mm,
cold wallets are tough. You got to figure out how to store them and probably insure them at a certain point, like gold bars.
mm,
um, right? And then you have to be able to exchange your crypto for goods and services that you use on a day-to-day basis, right? And until there's a way to probably store and preserve the currency and then trade it for something you need, it just feels like a very speculative, more of a gambling situation than an actual currency with intrinsic value.
yeah, yeah. And hey, if the payment system goes down, which it might do, for a couple of days, for who knows what reason these days, but AWS went out offline in the UK, Amazon Web Services, for a few hours this week, and people lost internet access and couldn't log on to bank accounts and things. So, there's vulnerabilities in the increasingly global systems we have for payments and cloud computing, where we might find payment systems go offline for a little while, and if you can't use your card to pay for your groceries, what are you going to pay with? And it's not going to be crypto; it's probably going to be cash. So my advice, and something I've been telling my friends for a little while, is just hold. You don't have to hold up thousands, but just hold a few $100 or pounds worth of currency, sterling or pounds, and just in the event that you can't use your debit or credit card one day to pay for gas or food, and that so I think it's reasonable to expect an outage of payment systems, and I think retreat into cash is not a bad thing. So if you think about what I'm saying, you know, online banking, it might be slightly vulnerable, particularly in the current climate. Holds retreat to cash, hold a little bit of cash. Governments are giving this advice now. Governments, so Scandinavian governments have given this advice to their citizens: hold some cash, have a radio with battery operated, have some food. We're not talking about survivalists. We're just talking about be prepared for a little bit of inconvenience. They're not saying hold crypto because you'll be able to buy your groceries with that.
Okay, so we've had a very interesting discussion on crypto. Let's talk more broadly in terms of, more basic banking fraud and financial fraud, especially as it relates to businesses and business owners. I can share a story at some point here about a unique kind of fraud I discovered a couple weeks ago that somebody tried to perpetrate on me. But what are when we think about bank fraud, especially in the context of businesses, what are some of the most common ways people try to commit the fraud?
No, that's a good question. I mean, I think that probably one of the biggest frauds you see perpetrated against businesses is sort of in what's called invoice redirection, and also something called CEO impersonation. But really, invoice redirection would be, say, you pay a supplier, you've been paying them for years, and you regularly do business and buy goods and services off this supplier. Their invoice comes in every month. That's all fine. Um, but criminals have figured that out, and they will impersonate one of your suppliers. They'll write to you or email you and tell you that they've changed their bank details. So, I've seen this happen time and time again in frauds against businesses, and usually that a letter comes in from a supplier to the finance team, and it says we've changed our bank details. Somebody quite junior in your business will key that on your online banking account maybe, and change the bank details because it's just seen as an admin task. And then a few days later, when the real, risky thing's happening, which is the CEO of the firm is paying this month's invoice, which could be $50,000 for the invoice for goods and services. Um, that person's thinking, okay, do I know who this is going to? Yes, I do, because it's my regular supplier. Am I expecting this amount? Yes, I am. Does it correspond with the invoice? Yes, it does. So I'll send that payment. But what they're not really seeing is that the underlying bank account and sort code, or the routing number in the US has been changed by someone potentially quite junior in your firm. So this invoice redirection fraud costs businesses hundreds of millions of dollars each year, and you're only as good as your process that you have for change of bank details. So and when you are approving a payment as a business owner or a senior payment approver, you've got to start looking beyond the account name to the account numbers and the routing numbers behind it, because in I think it's in the US it's pretty similar. In the UK we've taken steps to stop this now, but it used to be possible where the account number and sort code, or the routing number of a bank account, uh, it might have a name. So Jason Costain, my bank account number is this, but actually in the payee's name on the payee, in the old days, before something called confirmation of payee in the UK, which is a technical solution to this, you know, I could have put Mickey Mouse in the payee's name for a payment to Jason Costain's account, and it would still have gone through to my account, because it's all about the account number and sort code. It's not about the name of the account. So criminals have misused this over time. They'll put the real supplier's name in the payee field, but they'll have a totally different account number and sort code in the beneficiary data fields, and the receiving bank won't check and do anything with that anomaly, and neither will the sending bank. So in the UK now, there's steps taken to do that. So confirmation of payee has existed since 2019. It was introduced for the first time, I think, globally for domestic payment systems by a Scandinavian country a couple of years before. I think it was the Netherlands, and it's only really international payments in SWIFT where an account name and a number discrepancy might get picked up. But chances are, if you're sending a domestic payment in the US, you might be able to send it with a name mismatch, and it would still go through. So checking the numbers is the important thing, and locking down the process for change of bank details is a very important thing. The most junior person in the firm should not be doing that.
So it really comes down to hopefully eventually technology can help alert and support change management in a more secure way. But early, it sounds like it comes down to standard operating procedures, SOPs. So if a vendor bank account change letter or email arrives, like what do you do with it, right? It's not just
Yeah.
we need to validate that before we make the change in our system.
Yeah, and the criminals will expect you to validate it. So don't phone the number that's on the email. Don't phone the number that's on the letter. Independently verify and phone. And actually, I've seen the worst ones of these I've seen is where the supplier's email has been hacked, and they'll generate an email, a genuine email from the supplier to you that says our bank details have changed. So even if you're acting on what appears to be a genuine email from the email address of your supplier, do not rule out they've been hacked. So unfortunately, the best thing to do is just to pick up the phone, speak to someone you know, and verify. But there's multiple ways where this is made plausible. The criminals are expecting it to be challenged, so you've got to be one step ahead of them and think beyond just phoning back the number on the email.
Yeah, right. And it used to be with if you knew a little bit about how to open up and expand the email header, you could catch most of these phishing scams because they were not coming from the right domain name. They had the name listed as the sender person's name, but if you looked at the header with the URL that the email actually came through, you could pretty quickly identify it was not from who it was supposed to be. But if they've compromised the vendor's email system, then yeah,
Yeah,
it could look
absolutely.
like it came from just the right person at that vendor, and you wouldn't know by looking at the email
No,
header.
great point. Absolutely, and it's the same. Unfortunately, it can be the same with phone numbers. It's pretty easy to pay for impersonate a phone number as well these days. Still, unfortunately, so you get an incoming call. You could be saying, "Look, I'm phoning from I'm phoning from your local police department. You can look up the number and check. Look at your phone. Go online." Criminals do that all the time. So again, they're looking for ways to sort of get ahead of the traditional sort of skepticism and verification process that you or I might have. Which might be, I'll just click on the email header. What if it comes from the genuine firm and they've been hacked? To your point, Carl, I'll just look at the phone number. Oh, it's the one the bank use. Well, maybe the bank's number's being impersonated. So the security is only as good as the security of your supplier or the security of a telco. And actually, you don't want to rely on that. You want the security as good as your staff training and your own awareness of how these scams work.
Hmm. Let's talk about the CEO impersonation scam. I'll share a story. Like, you would think, even in an accounting firm, we'd be a little more internally astute about this. But I'll tell you a story. Maybe 10 years ago, we had a relatively junior accountant, and I got a phone call from him one morning. He had pulled over to the side of the road to call me back because he had gotten an email that looked like it came from me asking him to wire some
Mm,
money somewhere. I won't go into all the details for confidentiality, but I mean, this is an accountant, smart guy. He fell for it enough to call me,
yeah.
and obviously it was not legit. But I mean, they can become even more elaborate these days. Like, what are you seeing with CEO impersonations?
Well, I mean, I guess just to step back, I mean, it's frightening, isn't it? But I'd say that just cut any folks listening to this who run their own business where you've got employees who that might make that call or might be potentially duped. So the scam would be, say the boss WhatsApps me, and I work in finance, and just says, "Look, I need a couple of $1,000 sending to this address." You know, a lot of this is down to culture. So if your firm is quite often discussing business matters by WhatsApp, for example, and will the boss might request a payment be made by WhatsApp, and people in that group might act on that. Then you've set a culture that really is one about I guess um, you know people will follow your instructions. You need to have staff who are going to be a little bit skeptical and think, okay, why is the boss WhatsApping me to make a payment? He never does this. We've had this chat. The boss said he's never going to WhatsApp me about a payment. To always phone him. Don't worry about phoning me. So if you have that culture of relying on WhatsApps and emails to do stuff, then you're probably a little bit more at risk of CEO impersonation. So and these days you might get quite a plausible targeted attack. So there is no known use of AI to impersonate voices and video these days, and it's been used famously in some quite famous romance fraud cases where people were impersonating Brad Pitt or a government official. But if you think about that, it takes quite a lot of effort to do, and actually a simple WhatsApp to one of your team that says, "Hey, Michael, traveling today. I've lost my phone. I'm using this number. Somebody's kindly lent me the phone, or it's my new mobile. Can you send me a couple of $1,000 to this address because to my bank because I need to get some money out and to pay for hotels and stuff." You want your staff to say no. I'm going to phone you. You don't want them to say, okay, how much you need? Where do you need it sent? Yes, boss. No, boss. So I think it's still succeeding even with quite rudimentary approaches. So you just need to have the conversation with your team. You need to think about your culture. And I would think about having some kind of challenge process that says either phone me or, what's the word that we've agreed we would use in these situations. So, you know, and it's only going to get more sophisticated. So you might as well start doing this properly now, because, on the day that somebody gets a reasonably lifelike voice impersonation of you as your boss, then you better hope your staff are familiar with this scam and with AI and how it works. But people are falling for it now, even without the use of AI. So criminals aren't using it that much because you don't need to invest in AI and spend all that time. I
Hmm.
can just send WhatsApp message, and chances are it'll get replied to.
Yeah, I mean, we try to encourage clients to just have one accounts payable process so we can reduce the number of variables and
Mm-hmm.
you know, you know, WhatsApp and text messaging is not how we process accounts payable, and it shouldn't be. Just like
Yeah,
limit the number of variables, and then try to manage the variables that you do have. But just try to,
yeah,
like you said, culture is important. So, like when it comes to dispersing money, have a standard process. Don't deviate it unless absolutely necessary, but have that culture of skepticism when deviation requests come up, right?
yeah. Absolutely right. Yeah, yeah,
And then another kind of fraud relates to payroll fraud with fake employees, right?
yeah, yeah, yeah. I mean, it's crazy really to think about it. But if somebody is whose job it is to create payroll, and for a new employee, well, when was the last time a business owner checked how many people they were paying and
And
where they
maybe
were
if
going
it's
to?
a really small business and everybody knows each other, it may be a little bit harder to pull that off. Maybe it's a little easier to do it more of a mid-sized business where you see some name and you have no idea if they're a real employee or not.
Yeah, I mean, and this is a problem. Growing pains with businesses, a process that might have worked quite well when you knew everybody, first name terms. When you start to get a little bit bigger, or you've placed a lot of trust in one person, then you get these kind of problems. I mean, I was thinking of a case the other day that's seen, and it was early days in my career, and it still happens. But I one firm we worked at, um, we did a simple extract of what's the account numbers and sort codes, or the routing numbers for the bank accounts of our staff that we pay salary to, and then we just put it in Excel. And then we got another extract of the account numbers and sort codes, or routing numbers of the account details of our suppliers, and we just used Excel to dedupe the one list from the other, and found that one of our suppliers had the same bank account number as one of our members of staff. And they sure as eggs are eggs, had been raising false invoices and paying themselves. And you think, wow, that's really dumb. Why would they not open a fake bank account and try and cover the tracks? But you find in these situations that somebody in your firm was fine for several years, and then he just had a problem, marital breakdown, gambling problem, ill health, whatever it is. And one day they weren't going to be able to make their mortgage payments, and they were desperate for cash, and just thought, I'll just take some money from the firm and I'll pay back tomorrow when I get paid. And they might do that once, and it's a necessity for them, and nobody spots it, and they don't cover the tracks because it's desperation. And then nobody spots it this month. Well, maybe I won't pay it back, and then I'll do it next month, and then it becomes a regular thing. And you don't want to be one of those companies where you've missed something so obvious, and it's been going on for a couple of years, and when you add it up, it's a $300,000 problem. So, but sadly, you see that a lot, and this is how it happens. It seems really simple, but it's usually you know driven through some kind of desperation. And if you know your staff well, to know their personal circumstances and how they're getting on, it's much better to try and help them out in times of distress than it is sort of not know them well enough, because you don't know them that well and this happens. It might just be misfortune that leads them to misbehave, and that's before you get to the people who are actually setting out to defraud you from day one. So a genuine employee can turn out to be a fraudster.
Yeah. Now, when we were chatting earlier, you mentioned some telltale signs that you could look out for if you want to be a little bit more paranoid as a business owner for internal threats. What are some of those telltale signs that maybe you just keep in the back of your mind if you happen to notice something like that?
Yeah, I mean, it's just classics. Like I've mentioned, if you think about how people get into financial difficulty, it might be marital breakdown, it might be a gambling habit, it might be ill health, it might be a drink problem. But usually some of those issues come hand in hand with financial difficulty, so it's just worth having your antennae up for those things. And like I say, having an open dialogue with your staff helps. But then you look at some of the behaviour. If people are driving around in expensive cars, then that's something to think about. One of the teams in a bank I worked at, we had a member of staff who was linked. In the end, they were linked to an organised crime sort of investigation, and a potential partner of theirs was a drug dealer, and it turned out that they were driving a cabriolet car and they were going out at lunchtime to pay the parking meter when the rest of the staff couldn't have afforded to do that, and they lived in a terraced house, a small house, so their lifestyle didn't match up with their actual income and the job they had. So, and it should have been obvious, but nobody queried it, and a couple of years went by, and then we found out their partner had been arrested for as part of an organised a criminal investigation into organised crime and drug dealing. So yeah, those warning signs are there, and if you're in doubt, then there's probably something you should look at. And I said, so it's worth doing those annual checks to your staff to get them to say, there's been no change in the circumstances, they've not been arrested or charged with anything. There you can get credit bureau data on people perhaps, and you could ask the permission to do that. But it depends how onerous you want to get. But there's several things you can do just to check up on folks, and but like I say, just knowing them and understanding where they're at in the life stage is probably a good place to start.
And you mentioned a couple other things, if I'm remembering right, that's kind of stuck in my head, like somebody who's involved in the payments process who never takes a holiday,
Yeah,
like
yeah,
makes themselves invaluable, so they have to be involved in all the payments. And you're happy, like they're diligent, they don't take holidays, so it's easy just to trust them because it's easy, right?
yeah. And your most loyal member of staff who just bends over backwards and is available all weekend and holidays and everything might turn out to be somebody you've just placed too much trust in. So yeah, not taking holidays is a surefire signal of something wrong. That's why some companies have a policy that you must take at least, in the UK, say at least 2 weeks annual leave in one go. So it makes that then means that things are likely to surface. I saw one firm where there was an employee in the accounts payable department, and he was off sick, and he'd not been had many days holiday for several years, it seemed. When he was off sick, he was not in for a few weeks. Somebody opened his drawer, and there was I don't know, something like £50 million worth of unpaid invoices. This is from a company that's a multi-million-pound turnover. And this guy, there was no fraud. I think he just lost. Um, I don't know, his personal crisis maybe. He just couldn't cope with his job. He just put the invoices in the drawer and misreported a position, and then it created a massive kind of financial sort of black hole in the firm. So that was just sheerly somebody who couldn't cope, and the only reason we found out the issue when we did was because he was off sick. So having policies like compulsory annual leave is not a bad thing too.
Yeah, here's another pointer, I guess, for business owners, because one of the other, probably the biggest area of fraud that I've come across, at least in the last 15 years or so of dealing with, prospective clients at SmartBooks, is if they have an internal bookkeeper or someone who pays bills and runs QuickBooks, they'll put one vendor name in QuickBooks, but the check will actually be written to somebody else. So they'll put one vendor name in QuickBooks and the credit card payment will actually go to another name.
Mm,
And you're not going to catch that unless you either look at the bank and credit card statement to see who's actually getting paid. It's just part of your monthly due diligence. Or eventually some vendor, or customer comes to you and says, "Hey, I'm owed money by
mm,
you." And you look in QuickBooks and it looks like you paid them, but in reality, the money went to somebody else.
mm. I mean, yeah, and that's where you've got to think, okay, what's my control processes that might allow or prevent that from happening? And for example, I've known firms that would, if they've got a supplier chasing for an overdue invoice, who handles that? because you want it to be somebody different than the person who's meant to pay the invoices. Because if you wanted to commit not the perfect crime but cover your tracks, you do what you've just done, said Cal, which is redirect payments to somewhere else. The genuine supplier is not going to be paid. If you're the person who then deals with that, like, late invoice chasing situation, you could easily just ignore that, bullshit the supplier several months before things get to a point where it comes to the attention of the seniors in the firm. So yeah, different processes for handling of late payments, secure processes for handling payment of bank details change. Don't place it in the hands of one person. They're all things you can do to try and get in the way of this stuff.
I'm going to mention one other thing that may be relevant to especially kind of business owners and senior managers who get regularly solicited to go back to university for continuing education, because
Mm.
this happened to me. I always get, like, every week I get solicited by some university to go back to some professional or continuing or executive education program, and I just ignore them because I'm not going back to school at this point in my life, I don't think. But I got a letter in the mail that looked a lot like an acceptance letter to a university a couple weeks ago. I'm like, this is kind of weird. It looks kind of like a real acceptance letter, but it's got to be part of some marketing gimmick. And I just gotten back from a business trip, but was trying to dig out. I didn't spend a lot of time thinking about it. I just set it aside thinking there was nothing really to worry about. And then I happened to get an email the next day from a diligent registrar at my old high school. I'm 49 years old, so it's been a long time since I've been to high school and applied to colleges. But I got an email from my registrar at my high school asking if I'd requested a transcript to be sent out last week. And she said she sent it out. But then a few days later, she got a request for another former student to the same university. And this is a university where people from my high school almost would never go. So it raised a red flag with her. Why'd she get two, in short order, requests for transcripts to this obscure place that nobody really goes from my hometown? So she reached out to me. So sure enough, somebody had applied to two universities in my name and then applied for federal financial aid with the US federal government, had an application pending there, which I had to chase down. And if I hadn't done anything and if that registrar hadn't been smart and picked up that red flag, somebody could have taken out student loans in my name, taken the cash, never
Mm.
went to school, and then the government would be coming looking to me to repay the loans, which was, I hadn't been aware of that particular scam before, but something to be aware of if you start getting acceptance letters in the mail.
Yep. What a genius crime, right? Because that's not going to show up for several years, is it?
Yeah, because you go to school for a few years, you don't have to repay it right away.
Yeah. So I mean, yeah, but you got to admire the people who come up with that. But yeah, again, probably quite a loose process for applying for one of those loans. And like you say, if you're not careful and you just ignore stuff, then you could unfortunately find your own identity being stolen. I mean, I was one of the things that struck me. I'm fascinated in identity and how these things happen. But just a story from my own life. When my first daughter was born, we came out of the hospital with a slip of paper, and it was like a receipt, like an old school receipt in a shop with cash, with the notes cash registered with a bell on it, and it just said, baby, female, I think it parent's name and the date it was born, and I don't even think we needed to know the baby's name. We just got a slip of paper. So we then took that to the registry office because you're supposed to register the birth, and we just produced the slip of paper, and they just wrote it in a book. And then a few days later, we got a birth certificate, and I just thought, wow, we've just created an identity. And it was basically a scrap of paper that a midwife issued that was handwritten, and there was no verification of that. And we could have gone round a dozen different registry offices and registered this, use the same scrap of paper probably. But you that's just an example of quite often the identity processes that we all rely on ultimately have a very weak point, and it's the point of enrolment. So you've got to be quite skeptical when you see people producing documentation. You've got to be quite careful when of your own identity and how it can be misused, and any signs that that might be happening is important to look at. So, keeping a track of your voters roll, your credit bureau data, and any changes, any applications. It's all stuff you need to keep your eye on.
Yeah, so Jason, I feel like we should probably wrap this up shortly. It's probably getting late in the UK where you are, but why don't you tell us a little about, what you're up to these days, what kind of work you're doing to help people if somebody's got a problem or a concern or a question, whether it's business or personal related to financial or identity fraud. How do they reach out to you? How do you work with people, et cetera?
Yeah, sure. So I can be contacted on LinkedIn. So it's just Jason Costain, and ultimately, I'm passionate about fraud and fraud prevention, and a lot of the work I've been doing in recent years has just been advising different banks and organisations in different countries actually how to get ahead of fraud and scams. But I've also helped a couple of victims of scams get their money back as well, which is just something I've done, not for profit, just because I felt really sorry for them. So friends of friends, or people in different countries even. And so if people are really struggling, they can reach out to me and I'll point them in the right direction, but pro bono. But if there's anyone wants any sort of advice for their business or bank, then they can find me on LinkedIn.
And that's Jason Costain, Costain, right? Follow him on LinkedIn. He publishes occasionally on these kinds of topics. We all work so hard to try to drive profitable businesses and make money, but then protecting that money once we make it is also very important. And in a world that's increasingly sophisticated with these different fraud schemes, it's kind of incumbent upon us to be aware and what's out there, know people, follow people like Jason, stay abreast of different developments, and have that healthy attitude of skepticism whenever it involves, money going out of your account or the use of your identity.
Yeah, and I'd still say on my thanks, Cal. On my LinkedIn, you can find a link to my website. So I won't read it out here, but on the website there's a blog, and you can read some stuff that just tells you how the latest issues affecting scam victims and the UK banks in terms of fraud. And I think what's useful to see is the UK is very open. The banks are, at least, around their own fraud losses and what the issues are. So when you start to look at some of the stuff I've blogged about, you'll see just how different the performance of banks is when it comes to fraud prevention and protecting their customers. So if you're concerned that your own bank isn't up to the task, come to my LinkedIn page and look at my website, and you'll see some quite eye-opening stats in terms of which banks are getting it right and wrong. And that's not for you to choose one of those banks. It's just to be aware that sometimes the best scam defense is your bank as much as you. And you want to be with a bank that looks after you. So there's some telltale signs when they are and aren't doing that, and you can read about it in my blog.
Well, great. We'll get that link in the show notes for listeners as well. But thank you so much for your time and sharing all this information. I can tell this is a real passion of yours, and it was an incredibly valuable learning experience for me to be talking with you, Jason. So thank you so much.
Thank you.
So this has been another exciting episode of the Empowering Healthy Business podcast. Until next time. Another episode in the books. Thank you so much for tuning in. For show notes and more, visit empoweringhealthybusiness.com. If you would like to have a one-on-one discussion with me or possibly engage smartbooks to help with your business, you can reach me at C-A-L, at empoweringhealthybusiness.com, or message me on LinkedIn, where I am easy to find. Until next time, this is Empowering Healthy Business, the podcast for business owners, signing off.